Things are getting tense between the US and China. Remember those tariffs, the taxes on goods we import from China? Well, they've been a thing for a while now. And they've been escalating. The US slapped on more tariffs. China retaliated with their own. It's a back and forth that's got economists sweating. Why should you care? Because this trade war could have a real impact on your wallet. See, China's got a secret weapon, trillions of dollars in US Treasury bonds. These are essentially loans to the US government. China's also sitting on a pile of mortgage-backed securities, which are bundles of American mortgages. If they decide to dump these assets, things could get messy, fast. Think of it like this. Your neighbor borrows your lawnmower and promises to return it, then you get into a fight. They decide to get back at you by smashing the lawnmower. Not ideal, right? That's kind of what China could do by selling off US debt. So what happens if China actually goes through with this? Well, imagine a flood of US Treasury bonds hitting the market. Suddenly everyone's trying to sell and no one's buying. This drives down the value of the bonds. When bond values drop, interest rates rise, and that's where things get really interesting for American homeowners. Remember those mortgage-backed securities we talked about? China dumping those is like dropping a bomb on the housing market. Suddenly, lenders are panicking. They raise mortgage rates to compensate for the increased risk. That dream home you've been eyeing, it just got a whole lot more expensive. Let's talk numbers, folks. If China sells off even a portion of its US debt holdings, mortgage rates could skyrocket. We're talking potentially double-digit interest rates. Remember the 80s? Yeah, no one wants to go back there. Higher mortgage rates mean higher monthly payments. That means less money in your pocket for things like groceries, vacations, and, well, everything else. And for those of you looking to buy a home, good luck. With rates through the roof, qualifying for a mortgage will be tougher than a $2 steak. Okay, so things might sound bleak, but don't panic just yet. There are some things you can do to prepare for a potential economic storm. First, if you're thinking about buying a home, do it now. Lock in a good mortgage rate while you still can. If you're already a homeowner, consider refinancing to a lower rate. It's also a good idea to build up your emergency fund. Having some cash on hand can help you weather any financial turbulence. And finally, stay informed. Keep an eye on the news and talk to your financial advisor about how these potential changes could impact you. Remember, knowledge is power, and in this economy, we're all going to need a little extra power.